Are we in a market pullback? Lots of clients are having jitters right now. And is now the time to put together your power of attorney? All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. You can find them at Elevated Financial Management right here in Seattle. Between the two of them, over 42 years combined experience in the retirement planning business. They're certified financial fiduciaries. It's all about helping Seattle get ready for your retirement. I'm Morgan Patrick. Again, my pleasure to go back and forth with the gentlemen, and it's always about the importance of being proactive when it comes to retirement. And here on the program, what we do is we grab the latest and we talk about it, and it's all pertaining to retirement, and this news will impact you as you move to your retirement date and through your retirement. So guys, before we dive in on our first article, how's your week? Casey, let's start with you.
Oh, it's been great. Yeah, we've been really busy around the office, which is nice. We've talked about it a couple times recently. We've hired a few new folks. Mark and I were actually in Nashville last week, which was really cool.
Yeehaw!
Yeah, that's right. Yeah, we had our cowboy hats on, our cowboy boots, the whole thing. No, I'm just kidding. But, it is really nice. And we talk about this a lot on the show. But the reason we talk about it is because it's really important. We share, we get together a couple times a year with advisors from across the country and have a mastermind, right? And so we talk about what we see coming and how we can make adjustments to how we do things for clients and how we can improve, right? And it's really nice. We've got this great group of folks that we get to bounce ideas off of, and we get to pull things from that and bring them back to how we do things for our clients, which is really exciting. So that's been great. And things are going really well. Did I miss anything, Mark?
No, I know you, Morgan, because you're very familiar with Coach Pete. He's in your office actually. You know him very well. He was there, we just had a really good, basically a dinner on Monday night, and then of course, we were together all day Tuesday, and then flew home. So it was quick in and out, but it was really, really a great meeting. We got some cool stuff that we're going to be sharing with our clients.
Well, I'm excited to hear all about that. I do want to know a couple of things about the trip to Nashville. Love Nashville, by the way. Did you line dance? Did you get a pair of boots? Did you do any karaoke singing, anything like that? I'm not directing that at Casey. I'm looking directly at Mark.
Well, to line dance,
any mechanical bulls? Any mechanical bull riding?
To line dance, you'd have to know how to dance, so that leaves Mark out. Mark's a pretty good dancer, honestly. Yeah.
In fact, I wish we would have. We had no time to really go out. We did have a nice dinner at the JW Marriott downtown. That was a really, really nice evening. But yeah, we had zero time. We ate dinner, went back to the room, got up, and had meetings next morning. So
yeah, it was in and out, man. We were in Monday. Yeah, we had drinks and dinner with the group, right? And then Tuesday morning, business meeting all day, and then straight to the airport.
And didn't get on Broadway one bit, which is the main drag there, which you can walk for quite a while and have a lot of fun. So yeah, Nashville's a really, really fun town.
Well, I was just going to say this and add to it. We say on the show quite often that retirement doesn't happen in a vacuum. And think about this, too, when it comes to retirement planning and who you're going to work with, what firm you're going to work with, a firm that's out there doing these masterminds, meeting with the best minds in the country and talking about strategy and, how to approach different issues that pop up in retirement. That type of firm, they're on the cutting edge. And again, in Seattle, Elevated Financial Management, taking the time to go all the way to Nashville to meet with some of the best minds in the business so they can help you right here with your retirement. So guys, let's get into it. Calming client jitters. This caught your eye. Kimberly Foss, again, with Rethinking 65, I think this is perfect because there are a lot of jitters going on right now.
There is, yeah, and and we understand, right? We get it. When you see a red day in the market, people get uncomfortable. Nonetheless, a red week, a red month, right, where things are just down over and over. The year seemed to have started out on a positive note, right? I mean, I think January was if I remember, it was a couple % up in January. But then things have really gotten rocky. And so, we understand the jitters. I'll say this, the shortcut, and we're going to talk about a lot of different things here, but the shortcut in all of this that really calms jitters is having a plan. That's really it at the end of the day, right? So if you've been listening to our show for any period of time, you probably knew that that's what we were going to say. But that's the reality, right? Is that's what allows you to be confident. And not that none of our clients have made phone calls or that we haven't talked to anybody or things like that. It's not what we're saying. But I will say that, we like we've talked about, right? We've got a lot of friends in the industry, of course, right? And we know a lot of folks that don't do the same type of planning that we do. And they are getting a tremendous amount of calls, right? They are getting a tremendous amount of concern and emails and what's going on and how do we change and what do we do? Whereas our clients are much more confident in what's going on, right? They may still be concerned, right? Of course, right? It's not that you just don't care anymore. But when you set up your income, when you have a plan, that plan does account for market volatility, it really does help to solve a lot of the issues that people are facing right now.
In fact, to go along with that, I think one of the biggest things, and I don't want to toot our horn too heavily here, but how much time do we spend educating?
Toot. No,
yeah,
I'm just kidding.
that's just a big part. That's why we teach at the 4 community colleges in our area. That's why we do radio. That's why we do television. We don't want our clients to learn from the school of hard knocks. And if you get educated, you're going to feel a lot better about even when things are jittery or the market volatility is happening like it is right now. Last week, it was a bumpy ride, and now I think the market's up pretty good today. But tomorrow it could be going down again. See, so we don't want our clients worrying about what's happening each day. We want them to live the type of retirement where they don't have to worry about what the market is doing, right? And that's what education and a true plan is allowing our clients to do.
Mm-hmm. Well, it's education that gives you the confidence you guys talk about all the time, and knowing that you've had these conversations. If the market goes down, here's what's going to happen. If the market is through the roof, hey, you're going to benefit from that. Here's what's going to happen. It's the not knowing that brings on the jitters. Having a plan, it's almost like that calming effect.
It is, yeah. And, there's a couple things that I really appreciate and what we've been talking around the office about how we want to make sure to reassure, right, of course. But, I think the biggest thing that I can say right now is trying to make adjustments to your overall investment portfolio to stave off the losses or to account for inflation or CPI. What you're really doing in that circumstance is trying to time the market, right? Because you believe that X problem is going to happen next week or next month, and so you're trying to solve that by making some kind of adjustment. Now, it doesn't mean that you can't adjust your portfolio at all. We have adjusted portfolios, right? That is important, and you want to be making changes based on the volatility and the risk and what's happening in the world. Understandable, but trying to move everything to cash right now, not the best move, right? If that happens because of some movements that you've already put into place or things like that, that's different. But trying to move everything to cash right now just because of what's going on, then the problem is this, and we have seen a lot of advisors go through this. The issue becomes, when do I buy back in, right? That's the big problem. And so we have had folks that have come to us that moved everything to cash when Trump was elected years ago, last time, right? They moved everything to cash, and they sat there for 4 years waiting for the market to fall, and it didn't. And so they sat out of all those gains, right? Mm-hmm. So, the key here is that you want to be invested in the market. How much risk you're taking is very important. And if your advisor is not having that conversation with you or has not had that conversation with you, or you don't understand the risk that you're taking, now is the time to address that. And it may be that you call your advisor and talk with them. It may be that you call somebody else and talk with them, right? Because that's the type of support that you need. So keeping that in mind, we'll mention that for those that are willing to pick up the phone and give us a call, just the same thing that we offer every single week is a written financial plan. So that that plan will talk about the risks that you're taking, the investments that you currently have, how they're structured to perform when the markets are down, when the markets are up, especially how those type of investments create income. That is one of the most important things when it comes to retirement. We'll also talk about taxes with you. Your investments, are they tax efficient? What's this all going to look like over the next 20, 30 years? Is there something that can be done today that's going to help lessen taxes over the course of your retirement? That's a conversation worth having. We'll also talk about Medicare. There's 4 parts to Medicare. It can be complicated, but all of these pieces make up a true retirement plan. So again, don't hesitate. Pick up the phone, give us a call, get your written financial plan.
There's no cost to this, no obligation. You're not agreeing to become a client. It's an opportunity for you, as we like to talk about, just educate yourself. Ask questions. 866-668-3625. That's the number to call. It's 866-668-3625. They'll take a look and review what's going on, and you're going to walk out with a written financial plan. That's confidence, folks, and there's no obligation. You're leaving the checkbook at home. 866-668-3625. That's 866-668-3625. Take advantage of this. There are a lot of you out there just sitting on portfolios. There are just as many of you that are halfway down the path, and you are in desperate need of a second opinion. Call right now. The number is 866-668-3625. When we return on Elevate Your Wealth, we will get into more of the latest articles when it comes to retirement planning, the market pullback, and again, we're talking to all the nervous people out there. We'll talk about that when we return right here on Elevate Your Wealth. Welcome back into Elevate Your Wealth, hosted by Casey Elkins and Mark Stimpson, Elevated Financial Management, where you can find them right here in Seattle. Check out the website, great resource, efmnw.com. All letters, efmnw.com. There are TV show links there, radio shows in podcast form, great information about retirement. And again, you can certainly go and find out more information on Mark and Casey. They've got 42 plus years combined experience in the retirement planning business. They are certified financial fiduciaries. It is my pleasure, Morgan Patrick, to be on and just talk retirement and get down to brass tacks when it comes to what you need to be doing as you move towards your retirement date. And we get into the articles. We've already talked today about the calming the client jitters part of this. And now we go to Christopher Bacella, Market Pullback, Counseling Nervous Investors. This is more of a continuation, guys. What jumped out about this article?
Well, what I will say, Casey talked about this a little bit this last segment, but what I want to really focus in right now, there is a lot of concern, or everybody's curious as to what's going to happen with Trump's tariffs. I love this article, Julius Caesar's warning to beware of the Ides of March. Is that going to hold true when it comes to market volatility? March can be a very volatile month, and we're seeing it each day. You're up 500 points one and down 1,000 the next. See, so again, everybody's worried. What do I do? But what we want our listeners to think about, don't make emotional decisions. If you pull out of the market, like Casey was talking about, that can be bad, right? Because you're trying to time when to come back in. Or now if you're pulling out, like Casey said, for a good reason, and maybe you want to create fixed income, whatever that might be, that's a different story. But, interest rates are always being talked about now. What's the Fed going to do? What's the Fed not going to do? Inflation is always a major concern. If inflation looks like it's going to be going up, which there are many out there that believe that's going to happen with tariffs, of course, because they're worried about price increases on everything. And I think we all agree that's gone through the roof. Everybody goes to the store, or we in Seattle, we know how expensive gas is here. It's putting a real burden on families. And how are we going to do this if we go on a fixed income, which is what retirement is all about, right? So again, these are just some of the things that are on our clients and every listener's mind right now.
Yeah, and it's something that we're paying very close attention to. We're talking about a lot, of course. I'll just say this. I think kind of from a macro level, right, that for every point or every concept or idea about tariffs or inflation or whatever it is, right? For every point that somebody makes, there's a counterpoint to it. And what I'm really trying to get at with that is that we don't know. You may think something, and a political person or some financial person may think X, Y, and Z, but that doesn't mean it's reality. And so we want to be very careful about anchoring to certain points and saying, oh, well, see, this person said X, Y, and Z. That doesn't necessarily mean that it's true, right? That's the piece here. And the reality is this: FUD, which is fear, uncertainty, and doubt. So FUD, FUD. That is what sells the media. That is what sells the media. That is what sells financial conversations and talks and things like that. And that's not the type of information that we really try to push, right? We are constantly trying to push how to get away from being wrapped up in that type of thing. And the way that you get away from it is by having a plan, of course, right? So there is a lot of fear-mongering when it comes to these kinds of things. And there is a lot of concern. And some of it is valid, right? But some of it is very much overplayed. And, the reality is this: the market is going to go up and down. That is the truth. That is what it has always done. But if you look at a chart for the S&P 500 for the last 25 years, since the year 2000, the first 13 years were really rocky. Okay, so from 2000 to 2013, there was big growth in the market and big declines in the market twice. From 2013 till now, the market has pretty much just gone up. And so everybody has a recency bias, thinking, well, I'm going to continue to invest, and if I'm aggressive, it's going to work. That's not going to be true forever, right? And that's why it always comes back to diversification. If you are diversified and you have assets that are separate from the market, or you have assets that are decorrelated from the overall volatility of the market, and you're creating income and things like that, that is what helps you to create a plan. And so, the reason we focus on this is because it's the opposite of what a lot of people are talking about, right? It's not about creating a plan. It's about this news piece that came out and things like that. And that's not what we're interested in. We want to help people retire, right? That's the key.
Yeah. In fact, think about clickbait, right?
Yeah,
everything
exactly.
on the internet is truth. I think we all know that, right? But it's just not the way it is. But people click on different things, and then all of a sudden this article pops out and it becomes truth, even if it's out there to really create headlines or create worry or create movement of some sort. And we don't want our clients to go through this, right? Because what the markets do, like Casey mentioned, they're going to do their thing. So is there a way to not be worried so much if the market is volatile? That's why we believe so much in our different three buckets, the red, yellow, green bucket, right? And having money in each bucket so that when the market is not performing right, let's just say it's pulling back, we don't want to take money out of the market at that time, right? So if we've got guaranteed income, we can let that go down and also come back up, because the market has always done that. So again, having a plan is going to take so much anxiety away from you, and it's going to make the type of retirement a lot funner. All I know is our happiest clients are ones that have multiple sources of guaranteed income, not just Social Security. If you're fortunate enough to have a pension, you need to raise your hand right now and slap yourself and feel good about that, because you have something that is gone away today. The pensions are a thing of the past pretty much. And so again, having multiple income sources changes everything when it comes to good, solid retirement planning.
Well, you said a word, guaranteed. I mean, that word carries so much weight. And just to go back to what you were just saying, guys, I mean, when we have an election cycle and there's a change, if we go back over time, this happens. It's nothing new, but having a plan will help you weather whatever financial storm we currently are going through or may go through in the future. But going it alone and not having a plan and just sitting on a portfolio and hoping it goes okay. I mean, that's where, what we've talked about, the jitters and the nervousness comes in.
I'd just like to maybe add one more thing. 22 was a very unique year. There was nowhere to run, meaning equities were plummeting, interest rates were rising, so that made the bond market a really bad year. So what do you do if equities are down and bonds are plummeting that you want to use? So again, guarantees matter, as you just mentioned, Morgan, and we believe in that big time here. We want our clients' income to be guaranteed and not variable, because very few people want to have their income go down when they're used to a set standard of living.
Yeah, exactly. That's it, right? I mean, really, when you get to retirement, there's this, we've talked about this a lot, right? There's this idea that, oh, well, I only need 80% of what I used to make. And maybe that is true in your circumstance, but you're also talking about a lifestyle cut, right? That's the reality. So are you looking to cut your lifestyle in retirement? And for most people, the answer is no, right? If anything, they probably want to do more, right? If you're going to have more time, you need more money to go live your life, right? And go travel and do all those things. So, we've got to find a way to be successful despite what's going on in the market, and a plan helps to account for that. There's going to be big growth in the market. There's going to be declines in the market. And if you've got a 30-year retirement, I would recommend getting used to the volatility that we're experiencing right now, right? Because it's going to continue to happen. Though you can't do anything about it, but what you can do is you can get yourself a plan that helps you deal with it and helps you be successful despite what's going on.
Yeah, don't stare directly at the market. We call it what? Financial pornography. You get kind of carried away and you can watch it every day, and it goes up, it goes down. But having that plan gives you the confidence, as you guys have said so many times, moving forward to and through your retirement.
Yep. So if you're listening today, maybe you're getting ready to retire from Boeing or one of our other great companies here in Seattle, please pick up the phone and call us. If you're concerned about the market, what am I going to do if I lose 30, 40% of my money? Please pick up the phone and call us. Let us look at your tax situation. A lot of planners don't want to deal with taxes. They'll tell you to go talk to your CPA. What about your income? Is it going to be guaranteed or non-guaranteed? What about health situation? Please let our team put together a plan that you will be set on a wonderful course, and your retirement won't be something that turns out to be a disaster because you didn't really do the type of planning that we know every person needs and deserves.
This is a complimentary appointment. You're going to walk out with a written financial plan. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call this number now. Secure one of the appointments, 866-668-3625. That number again, 866-668-3625. We get it. It's turbulent. There's chaos. Having a plan is the calm in the storm, that oasis. And that's what you're looking for with retirement planning. Make sure you have the guaranteed income. Make sure you have the overall plan that takes into account your scenario. Call this number, 866-668-3625. Grab a complimentary appointment right now. You're not agreeing to become a client. And again, you're leaving the checkbook at home. 866-668-3625. When we return on Elevate Your Wealth, we've got 5 recommendations inspired by a cardiac scare. Somebody almost died. You do not want to miss this. We are back on Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. Again, EFMNW.com is the website. It's a great resource for you. All letters, EFMNW.com. TV show links, radio shows in podcast form. Great information there on the guys and the team at Elevated Financial Management. Check out the website, EFMNW.com. They are certified financial fiduciaries and combined over 42 years of experience in the retirement planning business. I'm Morgan Patrick. It's always a pleasure to talk retirement, and we hit the latest articles. And the next one, guys, 5 recommendations, if we can get to them all, inspired by a cardiac scare. This is interesting because, man, I think we all have this mindset that we're going to live forever and we keep putting stuff off. But you guys saw this article. You wanted to talk about it because, I mean, it's important. You got to take care of your business.
Yeah, you do, right? And this is really important, and this is a good wake-up call, especially for Mark and myself and maybe any advisors that listen to our show, and really all of us, right? Because this person that's talking here is an advisor, and he was standing at his desk on a Zoom call with a client, and about 25 minutes in, he said, I was overwhelmed with dizziness. He collapsed and passed out. Doctors found that he had an artery in his heart that was blocked, and so big medical scare. And, he was relatively young at this point. And so this is something that, it's the old adage is true, right? You always think that's not going to happen to me, right? Or it's not happening today, right? That's down the road, right? But down the road comes real fast, right? So things do change, and freak accidents happen, and there is a lot to consider. And so, he had this quote right here that I really appreciated. He said, as I was lying in the ambulance, my mind started to race. Would my family be okay without me? That's a heavy thought. That is a really heavy thought. I just got goosebumps saying that, right? And it's a good wake-up call to consider this, because not only is he facing his own mortality, but really he's saying, have I done what I needed to do to make sure that they're going to be okay, right? That's the biggest piece here. And that falls squarely on his shoulders, especially as the financial person in the household, right? So that is something to consider. So recommendation number one is don't overlook estate documents and life insurance. Now, I'm gonna tell on myself a little bit here. I've had life insurance for quite a number of years. I evaluated it recently and realized it's not sufficient, right? Your life insurance needs change throughout your life, and the need can go up or it can go down. Maybe it's the same as it was 5 years ago, but that needs to be reevaluated over time. And so I fixed that recently and made sure that I got the right amount of life insurance for our circumstance to make sure that my wife is taken care of. Because I don't ever want to feel what this gentleman felt in this saying right here. Would my family be okay without me?
Could I add one thing, case, because I love this, what he says here. He often hears when he wants to bring this up with clients is, I'm busy, I haven't got any time, or it's not a priority right now. But then look at the next sentence. It's astounding how unbusy you become while riding in an ambulance, and how everything continues even when you're gone.
Oh, yeah.
And that's what we want to emphasize.
The bills
about
keep coming. Yeah.
They don't stop. So you can't just assume and think I don't have time for this, because it can crush and devastate the people that you love the most, because you said you were too busy.
Right.
I know you and I've talked about it. I had a 25-year term, and I haven't gone back to the well yet, and I know I need to do that. So this was a wake-up call for me, even as a planner, because I think humans are procrastinators by nature, if we're being honest about things. Right?
Oh, I don't know what you're talking about. No, that doesn't sound right. No.
And so
the estate planning aspect of it too. A lot of our listeners are probably thinking, "Well, I really don't have much of an estate to plan for." That's not true.
That's nonsense.
It's not true, yeah. And not only that, but it's really about, and you might think, well, and we have clients that say this, right? Well, if I pass away and my kids get a bunch of money, then that's great. They didn't do anything to earn that, and I feel good that they got it. And if they have to pay a bunch of taxes on it, or it's stuff that they have to sort out, then whatever. They got a bunch of free money, right? So who cares? And I can appreciate the overall concept, but the real problem with that becomes it's an overly emotional time. I just lost my parent. I just lost my spouse. I lost someone that I love. And now I have to sit there and try and figure out their finances. It's not like I'm figuring out my finances, which at least I have some general concept about, or most people do. I'm trying to figure out their finances and how they did things. Do you have a list of all the accounts that you have and the custodians that hold them and the account numbers and how to access them and who to reach out to? Chances are you probably don't, right? And that doesn't include cars that have to be retitled and houses and all these things, right? So if you take the time to do a little bit of planning up front, see something that you could accomplish with a couple conversations with your financial advisor is going to take them months to sort out, right? And they may not even do it that well. So
it could be years,
exactly,
not months.
Exactly. So if you put in the time to do it up front, it'll take you drastically less time. It'll be much easier for you. And ultimately, it's a loving thing to do for them. Right?
I want to share it because I've got a client right now that's been going through the probate process now for over 2 years. And she told me, she said, Mark, no matter what, I do not want this to happen to my children because I didn't take care of business. See, but it was a wake-up call for her, but it's been a nightmare for her. And so we just can't overemphasize, because we've talked about, the life insurance side of this, but what about the health side? As he realized, he went to 2 different hospitals being treated, and they all wanted to know if he had any, health care powers of attorney, any of those things. And we need those documents, because if we can't speak for ourselves, who are we going to have speak for us?
Right.
Normally, we'd want our spouse or maybe a child that we trust. But if you don't have those documents in place and you become incapacitated, it's too late.
Then it's not even just about having the documents. They got to be in the right spot so that somebody knows where to go to get them. Because the document can exist, but if nobody can produce it, it doesn't matter, right? So there's steps to consider. There's a lot to play out. And again, it comes down to a loving care and concern for those that we may potentially leave behind. And it's a reality, right? It's something that has to be addressed.
Have a plan. Certainly will, power of attorney, an estate plan. An example that a lot of people might have heard about is, Prince. I mean, he passed away at 57, and it was sudden back in 2016. And at 57, he had nothing as far as a plan. He had a lot of money. Had a lot of property, had a lot of assets, but it was 6 years. You mentioned probate, Mark. 6 years of probate, a family fight. The
brothers and sisters, basically.
Recording studios were fighting over tracks. And it's because he's 57. How many 57-year-olds out there right now are going, you know what? I've got plenty of time to do this.
I got 30 years.
Yeah, I got lots
Prince
of time.
probably thought
years.
that, and he didn't have it. So it took 6 years and just some nastiness to get through that. So having a plan, being proactive. I mean, it's not that hard if you get ahead of it. And again, right now is an opportunity to come in and talk about your situation. Maybe you're concerned about how you're going to leave that legacy, how you should be planning for that. To grab an appointment with this firm right now, complimentary, call the number 866-668-3625. That's 866-668-3625. You'll get that written financial plan. You can talk about your end game, which I know is not a comfortable conversation, but it's one that needs to be had. So again, opportunity, jump on the call, 866-668-3625. All right, gentlemen, we've been talking about just things you need to just be aware of, some recommendations after, this article comes out after he had a cardiac scare. He almost died. And boy, I tell you, his checklist got pretty clear then.
Yeah, and it's funny because this second thing we want to talk about is long-term care. Nobody wants to talk about this, and we make it a very serious point. We need to talk about this with our clients because I'm in this business really because of what happened on my grandfather's side. My dad's side of the family, his father. And so he got Alzheimer's and went in and was in a very long period of time, and we watched him go through all of their liquid assets. But what I love about this article is that he realized he might have needed that. And he makes this point. He says, long-term care is one of the most misunderstood concepts in planning. It's emotional for caregivers and then family and then the financial challenge that ends up occurring. People do not have any clue a lot of times as to how expensive it's going to be, and they're going to have no insurance to cover that. Right now we have a facility in our town here, and it's pushing $13,000 a month. Where's that going to come from? See, so again, we want to have these conversations because there's some unique ways that problem or that issue can be solved if we're willing to talk about it and then maybe find out some options that are out there, because some people just want to bury their head in the sand and say, oh, this is never happening to me. And yet federal statistics tell us that 3 out of 4 are going to use some form of long-term care. So again, it's something we don't want to just ignore because it can blow a great plan to smithereens.
Right. And, the reality is, you mentioned it, Mark, right? So it's a conversation that nobody wants to have. That includes us. It's not a fun conversation for us either, right? It's not like we really enjoy talking about the potential for long-term care. Mark and I both, and probably most of the people listening to our show and most of the people in our office have all had loved ones that have been in a long-term care facility, at least for some period of time. It's not fun. It's not an exciting thing, and it's definitely not what really gets us motivated to do the type of planning that we do. But that doesn't make it any less important, right? And so it is something that needs to be addressed. And if you're thinking, well, I'm going to self-insure because I've got a few $1,000,000 and I can do that, that's great, but it's really inefficient, right? It's great that you have the option, but it's a very, very inefficient way to go about it. There are a lot better options out there, and we have clients that have a great wealth and they have chosen to get long-term care because it's about the best use of the dollars and how to make that money last as long as possible. So it's something that needs to be talked about. So that being said, for all of those that come in to sit down and have a conversation with us, it's an opportunity for you to leave your checkbook at home. You do not need to come in and bring any finances with you or bring any money with you. We will talk about your finances. We'll talk about your individual circumstance, and this is your opportunity to get a written financial plan. With that, we will talk about long-term care. We'll talk about making sure that you've got the right amount of life insurance and that it's set up properly for you. We'll also talk about the risks that you're taking in your portfolio, what can be done to lessen some of the concern with what's going on in the market and what's going on in the economy. We'll also talk about healthcare for essentially Medicare. So don't hesitate, pick up the phone, give us a call. We'll build a custom-designed retirement plan just for you.
Complimentary appointment awaits. Call this number, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number now, secure an appointment, 866-668-3625. You'll walk out with a written financial plan. We're back with more right after this. On Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. Check us out online. It's a great resource website. EFMNW.com. Those are all letters, EFMNW.com. Links to the TV show, Elevate Your Wealth, our radio show in podcast form, just good information on retirement. And between Mark and Casey, 42 years combined experience in the retirement planning business. They're certified financial fiduciaries. I'm Morgan Patrick. We go back and forth on the topics each and every week, the hottest articles when it comes to retirement, the importance of being proactive. We've been talking a lot about that today when it comes to what ifs. So we got into the article concerned about everything that he had not done because he had a cardiac scare. So we've talked about not overlooking just your estate documents, your life insurance, being proactive and tuning out the noise, making sure you get your plan in place. And Mark, you wanted to spend some time on this, and that's the beneficiary part. A lot of people are thinking, oh, yeah, I did that. But if you did it 10 years ago, if you did it a while ago, you may need to update those.
Yeah, I love Ed Slott, who is really well known in the United States. He had a PBS show for years, and he came from the CPA world. And I will just say that sometimes we take for granted that we've set up our beneficiary designation the way we want it. But the wonderful thing, if you do this right, you can eliminate probate on the assets that have beneficiary designation, which life insurance, annuities, pension plans. You want to do that because if you don't have this set up right, those assets can be drugged through the probate process, and there's no reason to do that, right? So we talk about that with our clients every year. We want to update that because life changes. What happens if we tragically lose a child? Do we want their portion of the assets to go down their line, or what we call per stirpes, to their children, or do we want it to go to their siblings? See, this is something you need to talk about, because if you don't, the courts are going to make that decision for you, and it may not be the way you wanted it to be done. The other thing, too, is to make sure that all of your bank accounts are set up either POD, which stands for paid on death, or TOD, transfer on death. That will bypass the probate process just on those bank accounts. So again, making sure that you've taken care of the ones that you love the most. And I want to address one other thing that we see happen a lot is Some parents will put a child on their account with them as a joint tenant. This can be a really bad situation. And I'll give you an example. What happens if that child is in a car accident and maybe they kill somebody? The attorneys from the family that's going to be suing her or him is going to look at that bank account as if it was theirs, and it really belongs to mom or dad. So that is a liability that we highly recommend that you don't take, even if you trust your children 100% to never do anything but the right thing with your money, right? And you can do and create the protection that we need to have through a power of attorney, right? Do we set up a durable power of attorney, which you have to have a couple of attorneys sign off before that attorney can spring into action? We don't like that as much. An immediate power is something that we are going to recommend for most clients. So again, these things need to be understood so that you get the right documents in place when something unexpected like this planner had happened at such a young age. But it was a big time wake up call for him, and it should be a wake up call for each and every one of us. It's something for me and Casey, Mike, and every listener. Please don't kick the can down the road. Take action and get these documents in place before you're in a crisis situation that you can't really change anything at that point.
And with the beneficiary piece, right, that really is important. If anything has changed, not just in your personal life, but in your direct family, right? So if you have grandkids now that you didn't used to have, and you haven't updated your beneficiaries or at least reviewed them, things may not go the way you want them to go, right? Because there are options that can be selected, as Mark mentioned, per stirpes or per capita, things like that, right? So if you haven't reviewed that and you have a new grandchild or, new grandchildren or whatever it is, there's things to consider, and that's something that you need to be reviewing on your accounts regularly, not just when changes come up, but just making sure that you understand how they're currently set up, right? If you set them up originally, but you're thinking, well, I guess I'm not quite sure what all that really means, that's a conversation you want to have, because it may not play out the way you think or the way that you want. And so it's an easy conversation. It doesn't take a lot of time.
Right.
Just have the conversation.
Yeah, I mean, that's being proactive, because if you react, it could take probate. It could be there could be so much that goes on there. So again, having a plan, just updating your beneficiary is absolutely huge. We've been going over, again, just some recommendations that was inspired by someone that had a cardiac scare. I mean, think about it. Overlooking any of your estate documents, your life insurance, the beneficiaries we just talked about, long-term care we talked about, and just tuning out the noise and being proactive. Have that plan. Dot the I's, cross the T's. We always say it here on Elevate Your Wealth. All right, guys, we are moving to our scenarios. Mark, you're going to be up first, and I just want to explain to our listeners, these scenarios happen across the country. We gather them, and we present them to the gentlemen, and they give us what they would do. Now, you may hear a scenario that's similar to what you're going through, but remember, it's not exactly what you're going through. Everybody is unique. You need to have a customized plan, so take these with a grain of salt. So, Mark, you're the first one up, and we have a 40-year-old switching jobs, $120,000 in the 401k. They're unsure if they should leave it in their former employer's plan, roll it over to an IRA, or transfer it to their new employer's 401k. How should they weigh the options here?
Well, this is a very easy one for Casey and I. We would absolutely be recommending that they roll into their own IRA at this point for a couple of reasons. And the main one is that their investment options inside most 401ks are fairly limited. I look at all our Boeing clients with their plans managed by Fidelity, and they've got a lot of options that a lot of plans don't have, but the bulk are doing good if you have 10 to 15 different options inside that 401k plan. If you move to your own IRA, the options are going to go into the thousands. That's probably the main reason that you would want to do that. Now, again, depending on your age, which we know in this scenario, 40 years, this person is also 19 years away from, the rule of no penalty for going into that plan early, right? 59.5 is kind of what we call the golden age if you want to go in and start to use some of those funds in an IRA or a 401k. Prior to 59.5, you're going to pay a big penalty, right? So you need to be working with someone that understands the taxes, but I would absolutely tell them to go into their own IRA plan, and then with the new company, you want to use their 401k if it's matching. If they don't have a match, then I'm not too excited about using a company plan. I think there's better things you can do on your own independently. If they're not giving you a match, I would say probably not. That wouldn't be the best place that you could go to save money over time.
We are in to our scenarios. The next one to Casey, 45 years old, $300,000 in the 401k, changing jobs, considering cashing it out. They're aware of the 10% penalty and taxes, but feel it could help them pay off some debt. How should they evaluate the long-term impact of cashing out versus rolling over?
Yeah, there's a lot of factors to that. I'll say this, that majority of the time, as just kind of a general blanket statement, we would not recommend cashing out your 401k early because of the penalty. In addition to that, sometimes people will get caught up in the idea of the penalty, it's 10%. For early withdrawal, and they forget also about the taxes, right? So you might be thinking, okay, well, I'm going to pay the 10% penalty, right? Okay, I got that. But man, it would help me pay off this credit card, right? And the credit card's at 15% or something like that, right? So I'll pay the 10%, but ultimately that's going to save me 15% in interest. But you also have to pay taxes on the money that you take out too, right? So that conversation or that equation becomes more complicated. And so I would say that, we don't have all the details here. I mean, there are some other numbers that maybe, could be presented that might change my mind. But just based on the information that we have, I would think that taking the money out early would not be the best option, not only because of the fact that how it affects you, like I said, just in the moment, right, of paying taxes and the penalty, and then you can pay something off, but it's the compound interest that really is going to hurt you, right? Because if you're 45, you're probably not retiring at least for 15 more years, let's say, right? So you got 15 years on $300,000 of compound interest that you are going to completely miss out on. And that will have a lasting detriment to your overall retirement plan. So you want to consider all these pieces when you think about it. It's not just, well, I could get out of the taxes. Now, maybe you can take a loan. Maybe you can do a HELOC. Maybe there's some other things to consider. And so you really want to look at that whole picture to make sure that move that you're making, which sometimes having a little bit of pain now is the right move to have a positive impact over the future. But I think the pain that I would choose to have would be to figure out how to deal with that debt in a different way so that you can still have the compound interest and make sure that you're playing your cards the right way.
Here's another thing to think about. Just think if you pay tax on $300,000, what if that throws you to a 37% bracket, right, from a 22? That's 15 plus the 10%. You could be looking at 25% extra taxes. So again, please, if you're listening, pick up your phone, give us a call. I know everybody's maybe thinking about the pressure is happening everywhere right now, right, from a financial perspective. So if you're stressing about taxes a little bit, maybe you've lost your job, maybe you've got a plan that you need to figure out what to do with the money. Keep your checkbook at home, give us a call, and let us just have a conversation about your specific situation, because we know that we can help, but you need to be willing to maybe just pick up the phone, make a phone call, trust somebody to have a conversation, and let's see what happens, because I think you might be pleasantly surprised that we can help.
Look, there's no pressure. There's no obligation. You're not paying for this. You're leaving the checkbook at home. Grab one of these appointments. If you've saved $250,000 or more towards your retirement, call right now, 866-668-3625. You're going to walk out with a written financial plan and a little bit better picture on where you sit when it comes to your retirement. Call right now, 866-668-3625. Again, complimentary appointment awaits, 866-668-3625. Another edition of Elevate Your Wealth in the books. For Mark and Casey, I'm Morgan. See you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC. an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.